Has housing destroyed Australia's economy? Let's have a look. Hello everyone, Florian Heise here, and welcome to another episode of Heise Says. I've got my morning stein of coffee, and I thought we'd have a look at a different topic today. Housing. Has it destroyed Australia's economy? Now bear with me, I'm going to put an argument to you that I've been thinking about for the last few days. And I know, as an architect, arguing against housing, or let's just say how housing was overstimulated in the last few years, may seem, well, contrary to my profession, and maybe why, I got into fights with lecturers when I was at university. But let's just have a look. We'll start by looking at this just image I got off an online image source place, Unsplash, where you get them for free. Lots of great images. Use them for my thumbnails. What innovation would you say is there? Is there any innovation? This isn't even necessarily an image from Australia. So what does that tell you in our housing sector? Now here is the thing. Here's a concept I want to introduce you all to if you're not familiar with it. And this is the idea of an opportunity cost. And this is something from economics that I think everyone should be aware of, and something I want to explain before we go into this any deeper. So, opportunity cost, and this is from Investopedia, one of my favorite websites. Can you tell I've got a lot of favorite websites, guys? Opportunity cost represents the benefit an individual, investor, or business misses out on when choosing one alternative over another. And I would argue, I want to apply this concept of opportunity cost to our entire civilization, or our entire nation. So while financial reports do not show opportunity costs, business owners can use it to make educated decisions. When they have multiple options before them, bottlenecks are often a cause of opportunity costs. Because by definition they are unseen, opportunity costs can be easily overlooked if one is not careful. Now, I know you're all shocked at the prospect of our politicians and bureaucrats easily overlooking something or not contemplating a potential outcome. I know that shocks you. And guys, I'm joking there, bloody hell. I've watched so many of these Senate inquiries. I'm worried about the bureaucrats. Understanding the potential missed opportunities foregone by choosing one investment or one intervention over another allows for better decision making. Now, is there much... Let me know, guys, do you think there's much consideration of the opportunity costs of our government's interventions into the economy at all? Or is it simply the headlines? Now, I know the skeptical cynic in me thinks it's just purely based on headlines. Let me know what your opinion is. So here's the opportunity cost. They've got a formula. Of course they do. So the opportunity cost is the FO minus the CO. Returns on best foregone outcome minus the returns of the chosen option. The formula for calculating opportunity cost is simply the difference between the expected returns for each option. Say you have option A, to invest in the stock market, hoping to generate capital returns. Option B is to reinvest your money back into the business, expecting the newer equipment will increase production efficiency, leading to lower operational expenses and a higher profit margin. Assume the expected return on investment in the stock market is 12% over the next year, and your company expects the equipment update to generate a 10% return on investment. The opportunity cost of choosing the equipment over the stock market is 12 minus 10, which equals to 2 percentage points. In other words, by investing in the business, you would forego the opportunity to earn a higher interest. And here's the key takeaways. Opportunity cost is the return of a foregone option less the return on your chosen option. Considering opportunity costs can guide you to make more profitable decision making, and you must assess the relative risk of each option in addition to its potential returns. So here we have the concept of opportunity costs, and this is applied to business. Now, this is a theory that's come to us from economic thinking of the Austrian school. And I would argue that we need to apply this to all aspects of our civilization. So what has happened here? Why am I picking on housing? Well, housing is being used as a vehicle for tax minimization by a lot of people, which I often, I am an adamant argument for reducing tax. I'm an adamant argument for reducing tax. I hate tax. I think the individual is better to spend their money than taxation. So why, you may ask, am I being critical of a mechanism that allows people to minimize their tax? And I'm talking about negative gearing, and I never thought I would actually be agreeing with Labor on one of their campaign policies, because originally I was arguing in favour of negative gearing because I saw it as a way to stimulate the housing market, and that a older generation will be taking away an opportunity from a younger generation to take advantage of this mechanism. But here's some things I want to bring to your attention. By drawing people into negative gearing, and we'll jump here, it's really taken off since the 80s, by drawing people into negative gearing and to investing, in housing, we are creating an artificial incentive. The government is intervening in the economy to draw more money into this industry and to pull it out of other industries. So let's have a look. The opportunity cost I'm talking about here of creating this investment into loss-making properties, guys, because these things are making a loss, negative geared properties. Now, if we look at back here, the example I gave here, that, between investing in your business 10% or the stock market 12%, what if you invested in your business or you invested in a house that made a loss and you used it to minimize tax? So this is the thing. The government, by intervening in the economy like this, is creating this perverse situation where there is an incentive for people to invest in loss-making infrastructure or investments to minimize the tax, which makes sense from a tax perspective, but from a civilization perspective, is it worth doing? It'll drive up the... Here's an argument of why wages are dropping. Rather than people investing in businesses, in infrastructure, in equipment, in innovations in our manufacturing industry or in businesses in general, there is this government intervention which is encouraging people to invest in housing. They all want to be landlords. Why work hard on a small business when you can just sell it and invest in housing and double your money because the market's overheated because of this artificial stimulus? Or you can, be a slumlord, make money on your rent. Do you see where I'm coming from? Do you see where this has a longer term effect on the economy than some people might realize? So let's have a look at how many people are using it. And here we have, so the percent of people, of all taxpayers, 10%. 10% of all taxpayers, and that's not all people. There's only 12 million taxpayers from when this data came in, are using negative gearing. That is a huge amount of investment that could have gone into other things. Remember, we're looking at the opportunity cost here, so we don't know where that money would have gone, where they would have invested it. Would they have invested it in the stock market? Would people have started new businesses to employ people? Sure, there's going to be an offset to the construction industry as well to meet that, but how do you know that wouldn't have gone into other portions, other businesses, construction there? And here we've got the example, because this was the argument. Labor was attacking negative gearing. They wanted to get rid of it, mainly, I understand, to minimize, tax avoidance by the rich. Of course, they turned it into a class struggle. They didn't turn it into a question about the deployment of resources in our civilization or the opportunity cost this has had on us. So we can see here, everyone's using it. From 80 grand below, 8%. 80 grand above, 18%. Nurses and midwives, 12%. Teachers, 14%. And police, 23%. I'm sure a lot of people would use negative gearing, or we know a lot of people that do use it. So taxpayers who negative gear is 1.2 million people. And here's a proportion of total taxpayers reporting a net rental income loss. So look at this. So nearly, from 94 to now, we're sitting at 13.5%, or when this data was, 2014, the latest data. Just think about that, 14% of the taxpayers in our nation, rather than investing in businesses that generate profit or in manufacturing, have put money into loss-making enterprises. And we're seeing the outcome of this. We're seeing just the incredible unaffordability of housing. It's created a bubble, I'd argue. Now let's have a look at another piece. Now this is an excerpt from an article I read a few days ago, And there's a really interesting takeaway here, and I'm going to repeat this. So in 1999, okay, so we'll go, here, okay, here. In 1999, more than 14% of Melbourne's GDP was attributed to the manufacturing sector. This has collapsed to just 6%. Okay? So in the period where people are now investing in these loss-making enterprises to minimize their tax, our manufacturing as well has also collapsed. Sure, you can make a loss in manufacturing, but there's to offset your tax, but there's a whole wealth of other risks, and it's a pain in the ass. You have to deal with staff, you have to deal with logistics, you have to deal with, if you're importing or exporting, you have to deal with enterprise agreements, all these other things. You have to rent a property, you have to pay rates, you have to pay for power. When you could otherwise just put it in a property, if it makes a loss, fantastic, you write it off your other business. So can you see an argument as to why this has been causing a situation like this, where people are disincentivized to invest in something more difficult and could go to something easier. We have a look here. Sydney's manufacturing sector accounts for almost 5% of the city's GDP, half of what it did 2 decades ago. Its dependence on the financial sector has grown to a nationwide high of 14%. So we're also seeing, as we're seeing manufacturing go down, and we're seeing finance shoot up. And I know people are saying, oh, we don't need a manufacturing sector. People have said that. That's a falsity. But I would argue, I'm putting the position forward that this decline in the manufacturing sector is a sign that investors have been artificially nudged to another sector of the economy, which has caused insane price growth in that sector, has caused a property bubble, and now we've got, we're at risk where lots of people are at arrears. And that's pushed wages. Wages have stagnated. Wage growth is pathetic. Unless, of course, you're in the public sector, then it's doing a little bit better, but still. And let me draw your attention to another thing. This is a video I previously did arguing that, is Australia in a depression? And this is the Keynesian position that a depression from John Maynard Keynes is a period of growth below trend. The economy's depressed. It's not like a mega depression, not like a mega recession. It's not like a recession times 2. We can see here, this black line is the trend of GDP growth per capita. And you can see all of the periods when it was below. So on average, over this period, we've been trending below since 2000. You can even take it back to 99. There's a few there. But we're trending below GDP growth. Here's another argument to say, is that the way to do it? I mean, what do you think, guys? Do you think negative gearing and government intervention in the housing market to encourage people to invest in housing has resulted in this decline in other sectors of the economy? Has it discouraged people from setting businesses? Has it discouraged people from investing? Should our government step back? How would you roll this back if you wanted to get rid of it? Labor tried, they completely buggered it up. Would you do it in a staged process? Would you give other advantages? Would you allow, here's an argument, okay, we're not getting the tax income anyway, and I would argue better to reduce the tax. What happens if people could roll back slowly from negative gearing and we just gave reduced taxation on individuals, reducing people's tax, so you don't create this artificial stimulus for this sector of the economy that is drawing resources and creating an opportunity cost for our nation away from other sectors. Let's just have a jump here. We'll look at the Atlas. This is from the Harvard CID, the Australian. This is their version. I know I always go to OEC, but this is just showing the ECI ranking, the economic complexity ranking, how it's gone down. Look, from 95, we've gone down 57 to 93. OEC, we're at 59 for 2017. See, they're both pointing at 2017 data. I know someone asked if I got more relevant data, but this is the latest we have access to. So there's another argument, guys, that this is creating an incentive, or it's disincentivizing people from investing in, I would say, more innovative, more value-adding, more complex aspects of the economy to allow people just to flip houses. So, what do you think? What is your opinion on this argument? Am I just pulling things out of the air? I've been dwelling about this for the last few days. I've been thinking about it, going, this is starting to all fall into place for me. What do you reckon, guys? How would you deal with it? How would you encourage people to invest in things that are probably a little bit harder than houses? Let me know your opinions and ideas in the comments below. Please like, share, and subscribe if you enjoy the channel. If you would like to help us produce more, we have a Patreon where you can make a small monthly donation. We also have Amazon and eBay affiliate links where we receive a commission every time you make a purchase. We have a relationship with Independent Reserve, so if you trade cryptocurrency, we receive a share of your trading fee. None of these things cost you anything extra, and it's a great way for you to support your favorite content creators. And finally, we have our very own Heise Says merchandise on our blog. Pocket Squares, handmade here by Rachel. Thank you all very much. Have a great day. And let me know your take on this and how you would deal with it. Does Australia need to get rid of negative gearing to help, to remove that opportunity cost for our civilization? Or is it hopeless? Take care, guys.